Nigeria's sovereign dollar-denominated bonds is sustaining the rally on the back of the policy direction of Nigeria's new administration under Bola Tinubu. Meanwhile, traders at Access Bank also expect buying interest in the bond market to persist with demand skewed towards long-end maturities. Well, Tobechukwu Ikpe, Treasury Team Member at Access Bank, joins me now for some more market updates. Tobe, thank you so much for joining us on the show today. We're still reeling from the impact of the policy direction and leanings of this new administration. Within the Eurobond market, we've seen some rally. The Nigerian stock market as well is also pricing quite nicely. What has been the market response so far in the last 24 hours, and how are things rating up today?
Okay, thank you for having me, David. So for the Eurobond market particularly, as you mentioned, we saw improvements in prices there yesterday. This is coming from the speech that was given by the newly inaugurated President Bola Tinubu on Monday, where he said that he mentioned removal of the fuel subsidies that have plagued the country for years. And he also mentioned harmonization of the multiple exchange rates. This particularly interested investors, and yesterday we saw a rally in the Nigerian Eurobonds market, which was up by about 2.5 percentage points yesterday. So coming to today, that rally subsided. We saw some profit taking earlier in the hours of today's trading session, as expected in every market. There are always speculators in the market, so some traders took advantage of the positive sentiment in the Eurobond market yesterday to take profit from some of the positions they took yesterday coming to today. So this morning we've seen those Eurobond prices slip on average about $1 across board.
And let's talk about now investors' positioning along the curve. Now talking about the T-bills and then the bond market at this point in time from Monday up until now. Any surprise twists?
No surprises. The market has actually been trading on a mostly cautious note. This is because there hasn't been much activity in the local space. The bond market, after the issuance of a new calendar where new maturities were brought on board, we have the 2033 and new 15 and 20-year maturities, 2053 as well coming on board. So most of the demand has shifted to those maturities that were taken off the calendar, like the 42s. That's where we see most of the activity. However, there are not much offers on those bonds as they are currently off the run. Most of the people currently bidding to buy those bonds are
And wrapping up the conversation, Tobe, now let's talk about the currency market. We're seeing the Ghana cedi appreciate, but for the Naira as well. How are things panning out as we're closing the month of May?
For the FX market, we saw some rally yesterday with the exchange rates appreciated by about 1 kobo yesterday. There was still some demand, as always, in the FX market. However, given the policy direction of the new administration, we're expecting some changes in the FX markets, which will bolster liquidity in that space.
Thank you so much for your time on the show today, Tobe. That was Tobechukwu Ikpe, Treasury Team Member at Access Bank, and on